Hi, it's Adam Hewson. I'm coming to you from the digital studios of Market Club, and the market we're looking at today is the Dow Jones Industrial Index, the Dow. As you can see, we're doing this live, and we're seeing some downward pressure, which is right here. We're down about 100 points in the Dow so far, but this is beginning to look extremely heavy. And with bear markets, you don't need any news. They just fall on their own weight. Whereas with the bull market, you constantly have to have positive news to drive prices up. So let's take everything off the screen for the moment. Let's see how we progress from the March lows from around the 6,600 level all the way up to where we were here at 8,800. Now we're currently trading around 8,241 points. As I said, we're down about 100 points for the day, and it looks as though we are looking to take out this level here. This is a very, very key level. If we go below, for example, if this action today closes like that, this is going to be not a good sign for this market. Also on the MACD, which is we've looked at before, the MACD, basically that's turning down and looking weak. So these are not good signs for the Dow. And as I said, the whole thing with markets, it's perception. And I think the perception is beginning to turn from green shoots maybe to possibly weeds. And I think that's what we're looking at so far. So let's look at, we've looked at the S&P 500, which is a broader index, I think a better indication of the markets. But let's take a look at the Dow just for today, because it's interesting to see what's going on. So here we have the potential head and shoulders. We've talked about this before. Obviously that's the neckline. So this is the neckline, which is what a lot of people are looking at. And it's amazing to me is that people start looking at the technicals when they can't figure things out. And so this is what they consider the left shoulder. This is the head, and this is what they call the right shoulder. So again, this is becoming a distribution period. I think people got in early here, and I think the smart money is getting out, or got out, let's say at these these levels here. And I think what we're going to see is a potential push, particularly if we today's action closes down below the neckline, today or tomorrow. If we do that, then I think we're going to see what we consider to be a fairly significant retracement. So let's take this off the screen, everything, and let's bring on our Fibonacci tool, which we've used before many times on these videos. And if you draw it from here down to the lows, let's make sure we've got this accurate, and you can see potentially some of the retracement levels. That's a 7,950. 50% is 7,670, and 61%, 61.8% to be, is 7,388. So the question is, how is that going to work out? We've got our, as I said, we've got our potential head and shoulders like here. So we could measure from this level here all the way up to the top of the head, which is approximately around there. And we could say 8,800 down to the lows here, which is 8,200. So it's 600 points subtracted from 8,200 would give us 7,600, which is right around this 50% level. And that, I think, if we break below this level, is got to be one of our first indications of where this market can go. Again, the market has gone through a period of time basically since May right the way through June, and you've basically you've had this action here. You haven't gone high, you just had sideways action in the form of a head and shoulders top. The lower close today or tomorrow is going to put great amount of pressure on this market, and I would suspect we'll see a move further down to test this 50% level and possibly to test the 61.8% level around 7,388. So this is Adam Hewson from Market Club. Thanks for tuning in and watching this video, and if you're a Market Club member, thanks for your business. We appreciate it. I'll see you on the web.